What a day for Opendoor, and what a week it has been. After months of speculation, endless debates about housing, retail activism, artificial intelligence, and the Federal Reserve, we can now say this. Opendoor has closed Friday's session at $5.01 a share. That's right, the stock finished the day above the $5 mark, up a massive 40% on the session, and at its highest closing price in 3 years. This is a moment worth celebrating. It's not just about the number itself, although $5 is a powerful psychological threshold. It's about what that number represents. It represents the resilience of retail investors who have refused to give up on this story. It represents a management team that is beginning to define a new vision after a period of doubt. And it represents a broader shift in the macro environment, where Jerome Powell's signal of likely September rate cuts has unleashed a surge of optimism across rate-sensitive sectors like housing. Let's pause and reflect on how far things have come. Only a short time ago, Opendoor was trading at levels that had many questioning its very survival. There were concerns about profitability, about the sustainability of the iBuyer model, and about whether the company could adapt to a world of high interest rates and slower transaction volumes. We even heard chatter about the possibility of a reverse stock split to maintain listing compliance. Today, that feels like a distant memory. The reverse split talk is gone. Profitability, at least on an adjusted basis, has returned. And now, the stock is not just surviving, it's thriving, closing at levels not seen since before the pandemic reshaped the housing market. How did we get here? Part of the answer lies in the broader macro picture. Jerome Powell's speech at Jackson Hole today was pivotal. He confirmed what many of us had been predicting for weeks, that the Federal Reserve is likely to begin cutting rates in September. For the housing sector, this is the green light everyone has been waiting for. Lower mortgage costs mean more buyers, more sellers, and more transactions. For Opendoor, which depends on activity and liquidity in the housing market, that is rocket fuel. But the macro story alone doesn't explain the scale of Opendoor's rebound. What makes this story so compelling is the convergence of retail energy, leadership narrative, and strategic reinvention. Retail investors have been at the heart of this move. From Eric Jackson's headline-grabbing stunts outside Drake's mansion to Anthony Pompliano's mobilization of shareholders as a decentralized hive mind, retail investors have taken ownership of this stock in a way that goes beyond just buying and selling. They've turned it into a movement. They've provided ideas, amplified the company's story across social media, and injected a sense of cultural energy into a stock that once traded quietly in the background. At the same time, leadership has stepped up. Acting CEO Shrisha Radhakrishna has been refreshingly candid and forward-thinking. His recent message to the Opendoor community marked a turning point. He acknowledged retail investors, praised their energy, and laid out a clear strategy centered on artificial intelligence. A year ago, he said he was skeptical of AI's ability to handle real-world, high-stakes work. Now, he is convinced it can do more than we imagine. He pointed to tools like Repair Copilot and RiskAI, products built in days or weeks that are already enhancing operations. He emphasized that the company is running lean, cutting costs, but at the same time strengthening its technological foundation. Most importantly, he reassured everyone that the board is fully aligned with management, focused on scaling products like Key Connections and Cash Plus. That kind of vision matters. It tells investors that Opendoor is not just another housing company, it is a housing plus technology company, a platform that is reinventing itself for the future. And when you combine that with the enthusiasm of retail investors, you get a cocktail powerful enough to move markets. There's another layer to this story that shouldn't be overlooked, the possibility of institutional validation. Reports that Eric Jackson has been in discussions with Korean institutional investors about a potential stake highlight that this isn't just about retail. If those conversations turn into real capital, it could mark the beginning of a shift from a purely retail-driven narrative to one that includes serious long-term investors. Retail energy provides the spark, but institutional money can provide the fuel for sustained growth. Now, let's look forward. Closing above $5 is significant not just as a milestone, but as a base for the next stage of the rally. Technically, the stock has cleared resistance levels that have capped it in the past. The next levels to watch are around $5.50 and $6, with the potential for further upside if momentum continues. With short interest still elevated, the possibility of a short squeeze remains real. If the stock continues climbing and shorts are forced to cover, we could see explosive moves beyond even the boldest of near-term targets. There's also the question of crypto integration. While nothing is confirmed, the chatter about possible partnerships with companies like Rome, which facilitate home purchases using cryptocurrency, continues to swirl. If Opendoor were to incorporate crypto functionality, even as an optional layer, it would attract an entirely new set of investors and customers. Done right, it could differentiate the company as both a traditional housing player and a forward-looking technology platform. Of course, the company will need to strike a balance to avoid being seen as purely speculative, but the potential upside is enormous. The bigger picture here is that Opendoor is beginning to redefine its identity. No longer just an iBuyer, no longer just a struggling housing startup, it is positioning itself as a technology-driven platform with AI at its core, retail investors at its side, and the potential for institutional backing ahead. Combine that with a macro backdrop that is finally turning favorable, and you have the makings of a true turnaround story. For investors, the lesson of this week is clear. Never underestimate the power of narrative, conviction, and timing. Retail investors believed in this stock when many on Wall Street didn't. They kept the conversation alive, pushed leadership to engage, and created a sense of momentum that has now spilled over into the broader market. Leadership, for its part, responded with vision and strategy, embracing both AI and retail engagement as part of the future. And the Federal Reserve, whether by design or coincidence, provided the macro catalyst that tied it all together. As we head into the weekend, the mood around Opendoor is celebratory, and rightly so. Closing above $5 for the first time in 3 years is more than just a milestone. It's a signal that the company is back on the map, that the narrative has shifted, and that the future is once again full of possibility. There will be volatility ahead, of course. There will be skeptics, and there will be risks. But for now, the story is one of resilience, reinvention, and resurgence. So here's the bottom line: Opendoor is not just surviving, it is thriving. It is no longer a story of what went wrong, but of what might go right. With AI innovation, retail activism, potential institutional support, and a macro backdrop that is turning positive, the pieces are in place for something special. Today's close above $5 is a milestone worth celebrating, but it may also be just the beginning of the next chapter in one of the most remarkable turnaround stories in the market.